Good morning, everyone, and you're all very welcome to Friday's market recap for the week that we have just completed or just on the verge of completing. Overall, another very turbulent week. We had that fairly strong rally, or continued rally kind of Monday, Tuesday. We did see that heavy selling on Wednesday, that midweek reversal, and we have seen the price action rally somewhat more modestly yesterday and today. In the pre-markets this morning. Now, the European markets this morning have continued fairly strongly. DAX is leading the way. The FTSE and the Euro stocks are also following suit to the upside. Structurally speaking, if we look at the economic calendar very, very quickly, bear with me for a moment, folks. If we look at the economic calendar for today, we can see that Lane and is speaking at 12 o'clock, or 1 o'clock even, should I say. Just my calendar is uploading again here. But if we look at the broader week ahead, gone by, overnight, the Chinese opted not to increase rates. Retail sales this morning was also quite strong to give that pound that little bit of a bump as well. And we've seen the PPI in Germany do moderately better, which is actually, contrarian to viewpoint, it's actually helped the DAX and the Euro stocks indirectly, which is a strange one. But nonetheless, we have to see that the markets from a price action perspective is continue to grind higher following that sell-off on Wednesday. Structurally speaking, if we look at the indices down, just to kind of give you that kind of roundup for the week, massive sell-off on Wednesday, very, very much a straight line. Price action on the Dow Jones, the Wall Street capitulated, took out those nearer term lows, and the price action since then is making this modest recovery now to the upside. So I suppose now into next week, the realistic viewpoint is, where does this, after this kind of lower high, lower low, lower high scenario, where we see this upside retracement come to an end? Will it get back into 32, or will it try and even retest or try and challenge some of these levels from here at 32,500? Let's wait and see. At the moment, the Dow Jones is trying to take out this close from last night Wednesday night into early Thursday pre-market. So the price action indirectly needs to take this level out first before we see that continuation in the upside. NASDAQ, meanwhile, however, is performing a lot better. So Dow Jones has actually been the worst performing index of the week. The Dow Jones broke the structural low and is struggling on the way back up. NASDAQ tested the lows but held firm and is actually well above in comparison to the Dow Jones. So again, similar reaction to NASDAQ. Where do we see this top come in? At the moment, the trend is still fairly clear. Lower lows, lower highs, lower lows, again, consolidation, and we could end up seeing a repeat of what we saw here in the indices repeat again. So we had back and forth. We could now see the indices do back and forth again, with a potential further move indirectly to this region up here. So I suppose this is now the focal point, this region here. If I just update my charts, this region up here becomes, I suppose, the new deliberating level for these indices into the early parts of next week. So I'll be watching to see, does the price action continue churning higher. On the S&Ps, again, structurally speaking, some short-term price action levels I was looking at yesterday has broken. Price action again continued to trend higher, not as well in comparison to the NASDAQ, but has bounced off those initial lows as well. So from my perspective, I have an area up here at 4070. So I would like to see the price action kind of get back into this region, 4050, 4070. I think nearer term to 4000 is your first initial fulcrum of price action. Now, even though we are grinding higher today and yesterday, we also have to see that it's coming increasingly labored as well. The upside movement here is a lot more labored in comparison to the sell-off. We even saw it here, massive sell-off. We did get a little bit of a pop, and then we start kind of flagging higher for the next wave of selling. So it'll be interesting. Fridays could very easily turn negative, as we saw on Wednesday. So just have that in the back of your mind as well. Structurally speaking, on the DXY, very, very interesting play over the last week or so. Price action, this initial level that we had on our radar on Monday between kind of 104, it initially stood around this region here, kind of 104 into this region down here on the 4 hour, which I had at the time, was drawn around this region here. So this is kind of was my initial pullback level on the DXY, this kind of initial level at the beginning of the week. Now, what actually happened, we flagged back in, we actually broke through the 104 handle back into these near term lows. We did get a near term low dead cat bounce, lower high forming, and price action is broken through again. Now, structurally speaking, the price action has come back in to test this structural low here from the 4th of May. So is holding this. So technically speaking, on the broader parameters, we are still higher high, higher low, higher high, higher low. But just structurally on the lower time frames, we are in a bearish corrective formation. So I suppose into the weekend now, it's going to be key to see how does the price action perform of these 102.50, 102.70 levels, because we've seen euro dollar, we've seen cable, Aussie, Kiwi dollar all perform very well this week to the upside, even dollar Swiss, dollar yen making downside corrective moves as well. So I'll be watching this area here around 102.50, 102.70 to see how does the markets perform. We're moderately above it at the minute, but if the indices continue to churn higher, this could very easily do it and third wave lower. So we've got phase 1, phase 2, another dead cat bounce. We could very easily see price action potentially coming back to this key level down here around 102. So that's always the downside risk there accordingly. Now, the last two things of interest is gold and the 10-year yield. Okay, so not many of the retail traders will know much about the treasury yields. Broadly speaking, that's kind of more an advanced investment asset class. But nonetheless, if we look at the 10-year yield at the minute as a metric, we actually see that the 10-year yield and gold are inversely correlated. Okay, so what that means is if the yields move higher, gold moves lower. If the yields move lower, gold moves higher. Now, over the last number of weeks, pretty much actually since the early parts of April, really, the yields have continued to churn higher very, very significantly and very, very sharply. So we've gone from kind of 2.5% to 3.3% very, very quickly. But now we're in this kind of corrective structure. Price actions kind of making, again, these short-term lows and short-term highs. Now, structurally speaking, yesterday or on Wednesday, we sold off from the 3% level back to this 2.8 handle. And what actually happened, gold got a very, very strong bounce because of the negative correlation and the yield selling off. Gold actually got a very, very significant bounce. So this was the first wave. We got a little bit of a pullback, and then this was the second wave. Now, luckily enough, I had managed to catch this myself personally. So I had longs kind of 18.07 and 18.11 here, structurally speaking. And gold has rallied all the way back into this shy of 18.50. Now, 18.50 was my original TP. I did cut out a lot of these positions, kind of starting to see the price action fade around 18.47, 18.46. So I'll be watching now to see, can the price action continue progressing higher into this level of interest between 18.50 and 18.60, or whether we get a moderate correction. Now, I do think at the moment in time, we are still obviously in a short-term higher high, higher low on gold, and on the interim, we're also seeing that the yields have lower lows, lower highs, lower lows. So at this point in time, the yields is obviously pulling back to the upside, which, funnily enough, is actually helping to keep gold fairly stable, fairly, well, I suppose moderate overall, because we had that massive impulse. Since then, it's kind of up and down. It's kind of not really doing a terribly great deal. So at this moment in time, I'm actually looking to see, can the yields, interestingly, just from an analytical perspective, how does the yields fare out in this short-term corrective structure? So at the moment in time, we are at the 382. It would be interesting to see, can the price action get back into this region up here, 61.8. So for that intents and purposes, 2.9 to kind of 2.95 would be the area of interest. Okay. Now, if this broader trend is to remain intact and we go higher high, higher low, higher high, we would be looking for the 3% level to be taking out for the price action to try and extend through this 3.1, 3.2 levels and continue kind of churning higher into kind of 3.3, 3.5%. So at the moment in time, for those who do trade gold, it's very important to kind of use the 10-year as your metric, as your correlation metric. So just a factor into consideration from a development perspective. Overall, then on gold, last but not least, if you look at gold, yes, we had that kind of bounce. I have an alert set up here because I thought we might start to see the price action flagging lower if the yields start to get a little bit more aggressive. So I'll be watching that as well. So this area up here, we've got a 1 hour, 4 hour structure here at 1853. So broadly speaking, if I go to the 4 hour on gold, I've even got the alert set here. The 4 hour is at 1852. The 1 hour is at 1854. So this region here would be kind of the bottom of the area of interest. So it'll be interesting to see, can the price action get one more impulse. Now, as we look at this, we've had a very, very straight line extreme move. We're starting to flag. So this is phase 1, this is phase 2. It'll be interesting to see, can we continue to go in for phase 3, come back down, break structure, and then sell off back into these lows. So that's something then to keep an eye on, is something like this, where the price action moves like this, structure, break structure, pull back, and then unwind. So that would be kind of, from an educational perspective, that would be something that I would be kind of tracking on the price action now over the next few days into the early parts of next week, because at the minute now we're starting to flag higher. Other than that, there's not really too much else to say. Keep an eye on the price action. Of course, ECB Lane is speaking at 1 o'clock today. Consumer confidence is also, and then we have a few other bits and pieces this evening. Overall, wait and see, can see how we close tonight into the weekend. And of course, just one final note: our competition for April has ended. May is starting. May's competition is actually starting at the end of the month, just to kind of sort out the first competition. So the next competition will run from the end of May to the end of June, and we have a lot of good prizes there as well. So people who have won the first competition have been contacted, and will be getting their prizes now over the next week and a half. All right. So that's pretty much it for this week. We will be back on Monday to do a preview for next week. Keep an eye on the price action. Keep an eye on your gold yield correlations, your DXY, to see does the price action strengthen, or do we see further selling? And of course, watching the indices to see, can the price action continue turning higher. It's interesting that with the dollar weakness and with the yield weakness this week, we thought the indices might be a little bit more corrective, particularly in the last 24 to 48 hours. But of course, not really much buying sentiment coming in. Gradual grind higher. So this is just unenthusiastic, to say it the least. All right. Until next week, guys, have a great weekend.